What is tax? Why does it even exist? And how can understanding global tax systems actually help you reduce how much you pay legally? If you're an entrepreneur or online business owner, this is a video you're going to want to watch to the end. My name's Elliot, and I'm the founder of UK and UAE-based tax and accounting firm Make Accounting Simple. I'm starting a new channel called Let's Talk About Tax to help break down complex tax topics for entrepreneurs and online business owners. Please note that nothing in this video should be taken as specific personal, tax, legal, or financial advice. This video is for educational purposes only. This is the first in a series of longer form videos where I'll explain how taxes really work and, more importantly, how you can take control of where and how you pay them. Let's start with the basics. What is tax and why does it exist? There are a variety of different taxes: personal tax, corporation tax, capital gains tax, sales tax, inheritance tax. But ultimately, they all serve one purpose: to help governments generate income. Governments tax their citizens or their residents and use that money to fund schools, healthcare, and whatever else they choose to spend it on. But not all countries tax the same. Some countries have high taxes because, in theory, they offer a lot. Think of the United States. It's a global superpower, full of opportunity, the American dream. Others, like Dubai or Caribbean nations, might not have the same historic appeal, so they offer low taxes to attract people and businesses to move there. And that lower tax strategy works. When people move to these countries, they usually set up businesses, they spend their money on rent, food, entertainment. That boosts the local economy, it creates jobs, it reduces local unemployment, and benefits the government without needing to tax residents heavily. Some high tax countries have actually used this strategy successfully too, offering tax breaks to certain individuals. You could look at Portugal's NHR, or non-habitual resident scheme. For 10 years, foreign residents can pay reduced tax rates, especially on foreign income, simply by moving to Portugal. The idea was essentially, well, we weren't ever going to tax you anyway, but if you come and live here and spend your money locally, we'll get the benefits in our economy and you don't have to pay taxes. It was a win-win until too many foreigners moved there, pushed the prices up for all the locals, causing the locals to have to move further and further away from city centres, and that's why Portugal stopped the NHR in 2025. Now, there are 4 main tax systems in the world. Understanding these is key if you're thinking globally about tax. The first is a residency-based taxation. This is the most common. If you live there, you pay tax. If you leave and move elsewhere, they stop taxing you. Most countries use this system, the UK, most European countries, Canada, Australia included. The second is citizenship-based taxation. Now, this is rare. Only 2 countries do this. One is the United States, and the second is a small island nation you've likely never heard of. It means that no matter where you live, if you have their passport, you pay tax. The only way out is to renounce your citizenship. The third is territorial taxation. You only pay tax on income earned within that country. Let's take Costa Rica as an example. If you own a surf shop in Costa Rica, you pay tax on that income. But if you earn rental income from property abroad or receive dividends from a foreign company, that income isn't usually taxed. That said, it can get a bit grey for online business owners. If you're running your business remotely or living in a territorial tax country, under the place of management rules, the foreign business could be seen to be effectively operating there, and therefore the dividends not qualify as true foreign income. The fourth is remittance-based taxation. Here, you're only taxed on money you bring into the country. Malta is a good example. If you qualify for their non-dom status, you can earn income abroad, and as long as you don't transfer it into a Maltese bank account, it's not taxed. Now, let's look at how the rise of location-independent income is changing the game. Traditionally, most people are born, live, work, and die in one country, paying taxes there their entire life. But things have changed. Remote work, online businesses, and digital tools mean you can earn money from anywhere in the world without needing to be tied to a physical location. This opens up the door to global tax planning. If your income isn't location dependent, you can legally choose where to live and pay tax. But, and this is important, setting up a company in another country isn't enough on its own. You also need to consider where you personally live, where the business is managed and controlled from, and where the key decisions are made. Now, when done right, this can significantly reduce your tax bill. When it comes to reducing your tax bill, you're generally faced with 2 main choices: tax reduction or tax relocation. For those living in a high tax country, you can choose to stay and reduce your taxes using country-specific strategies, deductions, allowances, and incentive schemes. But these are usually small wins. The biggest shift comes when you relocate your business and your life to a different jurisdiction. This allows you to completely change the tax regime you're bound to, allowing for the most dramatic tax changes. If your business is online and you're flexible with where you live, then you can legally relocate to pay much lower taxes in a country that also suits your lifestyle goals. So let's recap. Tax exists to fund government spending. Some countries tax very heavily, others offer low tax to attract people. There are 4 main tax systems: residence, citizenship, territorial, and remittance. Understanding them helps you navigate these global opportunities. And if you run an online business, you have the power to decide where you pay tax, and that decision can transform your financial future. This was an introduction to some of the core concepts of tax. In future videos, we'll go deeper into strategies, structures, and real-life examples. If you found this helpful, please subscribe to the channel and drop a comment if there's a specific topic you want me to break down next. If you're a UA or UAE business owner, my firm, Make Accounting Simple, can support you directly. Links are in the description to work with us. And if you want to work one-on-one with me to review or plan your offshore setup, you'll find a consultation link below as well. Also, as a reminder, this video and channel breaks down tax topics to make them easier to understand, but it is not personal tax advice, and these videos are for educational purposes only. Everyone's situation is different, so please speak with a qualified professional before making decisions about your taxes. Thanks for watching, and I'll see you in the next video where we'll be talking more about tax.